All right, welcome back to the channel, Crypto Trend Trader, with our midweek market update. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Everything looking good on my end. If somebody just chime into the comments there. What's up, guys? Just let me know you can see and hear me clearly. Like always, we're going to progress through a series of assets today, starting off with our traditional stuff, and then we'll work into crypto, commodities, and some tech. And then, of course, we'll take a look at the indexes as well. All right, great. Appreciate you, Dice. So obviously, today was the big Fed meeting, yesterday and today. Jerome Powell came out and spoke basically nothing different than what we were expecting. Essentially, just comes out and says, "Hey, things are getting better, but we're not going to raise rates or anything like that. Any inflation you're seeing is temporary." He did mention bottlenecks in the supply chain, which I definitely think is true. And then he also mentioned essentially like that we would see some inflated numbers for the next couple months, which makes sense as we're going to be looking at like comparisons to numbers a year ago, and you remember what it was like a year ago. So, but here we have the 10-year. Basically, was just kind of going sideways, consolidating, and then ran up for like the last 4 days. Hit a new high, basically like for the last couple weeks, back up at like 166, and then ducked back down. So, nothing out of character here. We'll notice that we're inside of the bearish control zone, and then left the bearish control zone, got the hard cross, the hard buy signal, multiple green histograms in a row. So there is a likelihood, obviously, that as long as we're above the 8 and 21, we're going to cross this back to the upside. Looks like we basically just found support on the 50-55 moving average right here and consolidated sideways for a little bit. And now we're getting ready to move up to like that 210 period. I think overall, he said what the markets wanted to hear. But at the same time, how long can somebody lie to you and you still look them in the face and believe them? I mean, after a while, you just stop believing. So we'll have to see. Obviously, the DXY dollar showing some weakness. It looks like we have now broken down out of the channel, got a strong sell-off here, and now it looks like we're more than likely going to get continuation. Now, I'm not completely ready to write this off yet, but it definitely looks bearish to me. Depending how you're looking at it, with like the daily, you can look at it a couple different ways and say that until we violate the wick right here, that we haven't technically like broken down from the pattern, but I prefer to go by closes. So when I look at it by closes, we've basically broken down from there. Now it is very possible we break out the bottom and then come back inside of it. So again, I'm not prepared to get completely bearish on it just yet. But we are down in the bearish control zone. Looks like we're essentially getting a rejection. There's no green histogram showing up at all on the daily. So at this point in time, I think continuation is more likely than not. It is possible too that we break down from here like violently and actually like continue down back inside this channel, or at least like along the channel perpendicular. So overall, dollar is definitely looking bearish, but I do expect interest rates are probably going to start rising here, but we'll have to see how that works out. So let's jump over to crypto. And this is a very important time right now too, because if interest rates flip back to the upside, that's going to present opportunities. If the dollar rolls over to the downside, that's going to present opportunities. If gold and silver strengthen here, that's going to present opportunities. If crypto starts to, pump, it's going to present opportunities. If it sells off, it's going to present opportunities. Traditional markets, opportunities. There's opportunities everywhere right now. It's just paying attention to not only like specifically what you're looking at, but also the correlation as well. So, what's up, Bubblies? Good to see you, Lazy Boy. Dice Never Lie, everybody. Good to see you guys. Looks like everybody's showing up early for this one. Yeah, nice. Appreciate it. Appreciate the lights. As soon as I showed up, there was already a bunch of likes. Definitely appreciate the support, guys. It's starting to get like in a pretty nice routine here, I think, and definitely having like the regular show up every week. So, so I got Bitcoin pulled up right now on the Kraken chart, just out of convenience, no particular reason. We obviously, actually, let's switch over to the one that we were talking about before. Let's look at our Bitstamp chart here. This is a Bitstamp chart that we've obviously been paying attention to. We've been in this downward channel for some time now. You guys remember when I drew this, obviously, and specifically we talked about once we get 2 touches on the top and 2 touches on the bottom, what we're looking for is a situation where we come down to the heart line, we then find support, and then we move in that direction and then break out. So in this case, we touched the bottom for the second time right here, came back up to the heart line, bounced it multiple times. This wick right here was, and depending, this was the same trade setup I posted, and depending on how you look at this, obviously, I don't typically use hard stop losses. I go by either the 4-hour or the daily, and I use like a soft stop, like basically if we close a 4-hour or a daily outside of my range, I'll close my position. But I'm also available typically to look at the charts like 24/7. So in this case, we basically came back down, retested that level we spoke about, retested it, got a pretty violent sell-off from it there, and then it completely got bought up. That's obviously bullish as it's a rejection of lower prices. And then we closed, the 4-hour second one at the same level, at which point in time you could have actually, if you hadn't entered a trade already, or I hadn't entered a trade already, could have just entered the trade there, and it would look even better than we were considering it back here. So, but obviously right after that, we got a powerful move to the upside. We now have completed the trade setup based on that last wick that just closed. 10.6% to the upside without leverage, and all but completed the measure move, which this blue arrow was just a measure move from the bottom of the channel to the top of the channel, which obviously we came just short of, a couple percent short right here. We could easily still move back up and fulfill that move, but once again, I don't like to get greedy on these things. I take profits along the way. We obviously put in quite a bit of strength on the indicator oscillators. Obviously the bullish divergence that I was talking about between this point and this point, and our various other points here, actually different indicators, but you can look at this one right here. You can look at that one right there. We can look at the traditional indicators we always look at. We can look at moving averages, but very clearly bullish divergence between these 2 points. Took a ton of energy to sell off to right here. Took far less energy to sell off much lower in prices, at which point in time, we print our bullish divergence. What we were paying attention to was if we printed a third stab of bullish divergence, which we did not, but obviously that played out. Now, what does that mean? Bullish divergence, what does it mean on a 4-hour after a sell-off? Well, in my opinion, this is a dead cat bounce. We had a pretty violent sell-off, 20 plus percent over, basically a few days. So what would you expect to happen? A relief rally off of that point. But now we need to pay attention to like the overall direction of the trend and what's more than likely going to happen right now. So obviously this is an extremely bullish candle, the green one that came in. After that, decently bullish candle, and then an indecision candle after completing our measure move, after completing our trade setup at a key resistance point, based on these previous like support level, and now we're back at that resistance trying to break back above it. So, obviously either situation could happen. We could break back above it, find support and get continuation, or we get rejected here and sell back off. I don't think this move to the downside is done. This to me looks like a very clear, A, and then like a B, a push back up, and then we would get C, like another extension down. But we'll have to see how that plays out. You can notice obviously on the daily that, we're starting to show some strength back from the Fisher Transform. And then also, we're not gaining a ton on the on-balance volume, but that move back up showed us that there was quite a bit of buying came in off of that. So people were definitely coming in to buy that dip. But now we need to see what happens. Do we get continuation? And then you'll notice also, obviously, on the waddah explosion, we still have the blue slope line. We're not seeing nearly as much volume come in, nearly as much like aggressive selling coming in. But it does not mean we can't just roll back over and continue to the downside. So before I even start to get bullish on this, I want to see that blue line flip yellow again. See a couple of green bars come in here. They don't have to be massive, but we want to see a bar come in, and then we want to see a couple of them getting progressively larger, showing us that, the momentum is starting to pick back up to the upside. Otherwise, it's just going to look like, well, we still have a lot of selling to the downside, but it's just a lot less. But we're not seeing like, it's not looking particularly bullish, even after this big candle. It doesn't look particularly bullish. It just doesn't look as bearish. So that's what we're paying attention to on like the longer time frames and how I interpret the price action. Now we are back above the 8 moving average on the daily. So, we could potentially flip this 821 back over if we get back above the 21. It does look like we're essentially getting rejected off of our 50 simple moving average right here, which you'll notice that 50 simple is very important. Let me turn off the drawing tools. We bounced like the 50. This is more of the 55 right here, but this is perfectly off of the 50 simple, the darker green moving average. These two are perfectly off of the 50 simple. This one is just above the 50 simple. And then you'll notice we find resistance here 3 days in a row off the 50 simple after finding support. We get that big wick come through it, and then we find support. And now here we are back up here getting like a front run rejection of the 50 simple. So, we spoke about this specifically before we got this pushback up here. I literally said the range I thought was going to be was basically up to like that 56 and some change range was going to be like the top, down to like the 45 range was going to be like the bottom. And then we were essentially just going to chop around inside this range while Bitcoin decided what to do. And that's basically what we've done. We tested the bottom of the range. We tested the top of the range. So more than likely, we're just going to oscillate inside of this range while, people decide what to do. Tesla obviously came out and said that they sold 10% of their Bitcoin. So that was, 140 million in Bitcoin. So that's, kind of throw things into perspective. We'll have to see. Obviously that could have something to do with the pressure that we saw. You could also see them come back out and say that they reaccumulated at a lower price. I doubt it, but there's definitely like some market moving like bits of news and everything. Elon Musk coming in and whatnot. But it looks like at this point in time, we're going to start seeing like some strength build to the upside here. It's just a matter of can we break through this resistance. So, and then switching over to futures, we still haven't come back up and filled like that gap or anything. We could easily get back up there. I would have to see like obviously a little more bullish price action before I consider like, that like 62,000 range probable. But in the meantime, paying attention to see what happens. So, but here again, you'll see right at that 55 is exactly where we're getting rejected here. 1, 2, 3 days in a row at the 50. I'm sorry, that's 50 simple. 3 days in a row at the 50 simple on the futures chart. And then obviously this strong, like this indecision candle rejection here was right at the 21 day. So, I wouldn't put either one past us just yet. This is what we were talking about too with the 89. We had overshot the 89 on traditional markets, but it was actually like a front run on the futures chart. And then you'll notice also that, basically we closed that big wick and then just gapped straight down to the bottom of the wick and then just pumped since then. So, that was definitely a signal. As soon as you see this thing start pumping up like big and green like that, we're probably going to get the break of our pattern and that move back up to the upside. So, but obviously, the pattern was very clear. It was very clear exactly what was taking place right here, whether you're looking at it on like the 4-hour or the daily. We're very clearly inside of that channel. Now we've broken it. So now we need to wait for another like pattern or something else to develop inside the chart. So, and then looking at Dogecoin, Doge had sold off fairly violently. Came back up and bounced, got the 821 cross back to the upside with this little pump back here. I think this thing's just going to chop sideways for a little bit, not put in any new highs until we kind of figure out what's going on with Bitcoin, basically. I think this is just going to, it's just going to like take turns being like the new fad. I mean, there's enough people watching it, following it, and then like buying and not selling out of it yet that I think Dogecoin still has more price action to the upside. I think before the markets top out, this thing makes it back to $1. Now that's just my opinion, but just by like the actual price action and what we're seeing, and this thing just constantly staying bullish, I think it's just going to be a matter of time. Like, you can time it all you want, but I think it's just a matter of time before it continues to pump to the upside, and it meets at least like, it fell short just of that 50-cent target, but I think it's going to $1. ETH still showing strength, new all-time highs, still pumping up here, getting the hard buy at kind of the top of the range, but he spoke specifically about a bunch of these things and how it looked like they were just putting in like bullish consolidation. Price action was going sideways while the indicator oscillators were resetting from like the top areas, and now here we are, continuation to the upside. I think we still got, yeah, we finally topped out exactly at the 1.618 target. You know, after that, our next target's quite a ways up. So we'll have to see how everything plays out. But again, there's nothing from Ethereum saying we want to get out of a trade at this point in time. Cardano, this thing had a decent amount of price action back to the upside. I mean, it was looking absolutely atrocious from that sell-off, and from then it's come back up 45%. I mean, if that's not volatility, I don't know what is. You know, even if you bought in off of like a candle close, I mean, it's up like 23% back up here. Will it put in a new all-time high? I mean, look, let's be real. This thing's just going to do what the rest of the market does. XRP, same thing, not quite as bullish. You know, pushing back up here, lower high, not nearly as much of a move to the upside, but again, I mean, XRP is not doing anything new. You know, I don't expect anything to change. The majority of cryptos right now, it's like a name brand. It's basically like NASCAR. You know what I mean? You pick your favorite car by what color it is, or what sponsors it is, or if you like their logo or whatever, and then you get behind that one. Let's be realistic here. How many cryptos are actually doing anything different in the last year? How many cryptos can justify their price being 10 times or 50 times or 100 times higher right now based on actual measurable changes in like the dynamic of it? You could argue that some of them are just undervalued because we're in a bear market. You could argue that some of them have potential for innovation in the future. But how many of them have actually innovated anything in the last year? How many of them are actually stronger in the last year? As far as I'm concerned, everything we see in crypto markets is the tide is going up and it's lifting up all ships. So to me, it's like a shell game. Whichever crypto is popular, whichever crypto starts trending, whichever crypto starts moving, I'm not seeing like actual innovation or changes in any of these like specific blockchains that's all of a sudden making me like more ambitious. Like you could argue it about a couple of them. You could argue Cardano's making some changes. You could argue Ethereum's making some changes. You could argue all kinds of stuff. But the truth is in all reality, this is just a parabolic market cycle that every crypto is just going to pump up through. And depending on what happens with Bitcoin dominance and crypto market cap is what's going to happen, whether it's Bitcoin pumping or dumping or whether it's alts pumping or dumping. Riot blockchain did exactly what we spoke about. It was able to break back inside of our clear support line right here. Found support, got to pump back up. We could very easily come back up to the top of the range as high as like $48, $49. We are in the bearish control zone, leaving the bearish control zone, potentially going to get a cross back to the upside. But again, as these triangles tighten, the range that you could trade becomes less and less. So at this point in time, you're more looking for like a break, consolidation, and then looking to get in on continuation. But less likely to just like get into a trade, you know, inside of this range because there's just not enough meat left on the bone, in my opinion, of course. MicroStrategy still looks weak, you know, basically same exact thing, you know, just going sideways to down. There's no new interest coming into this thing. There's no reason to buy this or Grayscale or something like that right now, because you're just getting less than what you pay for. You know, it's like going to a store and instead of like seeing what you want to buy on sale for a discount, what you want to buy is costing more for a premium. So why would you buy it for a premium? Eventually it'll level back out. You'll be able to get it for a reasonable price. But right now, not happening. Coinbase, exactly what we said. You know, push back up here. You know, I spoke about how this is overall bearish. We pushed back up, got back, you know, a little bit of the losses, but we're still well below like clear resistance points and everything. That looks like to me basically the 1.618 like bounce back to the upside here. Maybe we come back down though. Maybe we like close this gap back here at the 1.5 and then sort of base out from there and get continuation. But as far as I'm concerned, this doesn't look overly bullish to me. So until it looks bullish, it's going to continue looking bearish. So I'm going to jump over the comments real quick here. Yeah, good to see you, Lazy Boy. Definitely glad to have you. Tahid, good to see you, man. Appreciate the positivity. 1 a.m. Okay. I'm probably not going to go too late today. Probably going to keep it around like 2 hours, theoretically. I've read it was half of 1.5 billion. No, from what I understand, they basically doubled their position because I think he bought it about 28 or 32,000 and sold 10% of it. But I think he was up basically 100%, sold 10%, and now that same position, which was 1.4 billion, is valued at like 2.4 billion roughly or something like that with the pullback and everything. But again, I mean, that's what I heard. But I mean, it's not a big deal either way. They said they were testing liquidity, and that was the reason they sold some. I think Elon was just being smart, taking profits. Plus, I thought it was funny that that was like more than they made like actually selling cars. They made off of like day trading Bitcoin, which is kind of humorous. YouTube notifications suck. Just got an alert after you've been online for 15 minutes. Yeah, they really do suck, man. But I mean, I'm pretty on time, on point with the schedule CW, so you should be able to like have an idea when I'm getting ready to. Is that a perfect death cross on Bitcoin? Um, what time frame are you looking at? Because like for me, the only death cross I go by is the 50 and the 200 or the 55 and the 200 exponential. That's a death cross to me. I don't really count any other death crosses. I mean, people call death crosses all kinds of like moving averages crossing, but actual death cross is really the 50 and the 200. So we're not even anywhere close to that on the daily. If we switch over to the 4-hour, you know, you could technically argue that the death cross was either between the 55 and the 200 exponential right here, or the 55 and the 200 exponential right here, or the 50 and the 200 simple right here. But, you know, I talked about this specifically also. You know, people always get like, see a death cross and they're like, oh, it's going to keep selling off forever. I've talked about this so many different times on here. When you're in an overall bull market and then you get a death cross, a lot of times that's the absolute bottom. So you'll see right here, the 50 and 200 cross right here, the 50 and 200 cross right here. And what is that? It's the absolute bottom. Now, since then, you know, obviously we had a wick come down a little lower, but since then, all we've done is go up. So, I mean, you could argue that a death cross is like, oh, that's it. We got the death cross. Now it's the start of a bear market on whatever time frame you're looking at. But in my opinion, it should go along with the macro. Like the macro on Bitcoin is very bullish. So do you really want to like sell your position because we got a death cross all of a sudden? And then all of a sudden all it does is go up from there? No. And, you know, that's not always going to be the case, but a lot of times the algos would kick in one last time to try to save price action. So now if we can't get back above the 200 exponential and 200 simple moving average, we'll see this roll back over and it will be a confirmed death cross 100%. You're totally right. But a lot of times you will see at least a retest of the 200 exponential and simple moving average. At least one final attempt to save price action. And if you look at the 4-hour, we are showing some weakness. We are getting the hard sell. We could easily roll back over right here. And like, I'm not convinced one way or another on Bitcoin's direction from this point, to tell you the truth. So we could very easily get continuation to the downside, but we'll have to see. Dow Jones, you know, this thing started to show a little bit of strength here coming out of like the Fed meeting and everything. But at this point in time, you know, what have we been doing? We've been going sideways at the top of the trend for over a week, you know, consolidating maybe, showing quite a bit of weakness. You could all call it a bullish reset, but we'll have to see. I mean, if this thing just starts pouring back out, I would consider this to be a buying option back down at like 32,500, as it would just be, you know, basically a breakout of the range and then like retest followed by continuation. But again, I mean, I'm not interested in buying really at these levels on any ETF, at least. Specific companies, whole different situation. But ETF wise, I think this is going to be more and more of a stock pickers market the further this develops. The longer we keep stringing this along for, the more intelligent you have to be with your investments, in my opinion. You know, we're obviously very high on these ranges. This is the S&P now, again, like up here at all-time high at very high levels on the indicator oscillators, showing quite a bit of weakness, but price action is just hanging out. I mean, one of two things happens. We either hang out here long enough and nobody sells, that the indicator oscillators reset and then we continue to the upside, or we hang out here and nothing happens and we keep showing weakness in our momentum oscillators and whatnot, like indicators. that eventually people just say, all right, fuck it, and just start selling. And then this thing starts just pouring out. So, at this point in time, it's like, do you want to de-risk at very high levels, or do you want to just wait and see what everybody else does? I mean, it looks to me like everybody's just waiting to see. But what is it going to take for a catalyst to the downside or the upside? I mean, that's why I say there's so much opportunity right now. There's a million things that could happen that would be a catalyst to the upside right now. There's a million things that could happen that would be a catalyst to the downside right now. But it seems like the least important, the least influential is the Fed at this point in time, because what does the Fed do every time? Gets on and just is like the dovest person ever. Like, they have like 100% like dovish outlook on everything. Don't worry, we're not going to do anything to fuck this up. We're going to keep supporting the economy. What they mean is, we're going to keep these markets propped up, all of them. The housing market, the stock market. We don't even care about the crypto market. I mean, we want everything propped up so that nobody's afraid, because we don't want people selling anything right now. And that's essentially what they're saying right now. Like, if you heard Powell talking about the housing market, and he's like, yeah, it's unfortunate. It prices out new homeowners. Yeah, but, it's because of supply constraint. It's not because of the policy. The policy's fine. Everything's fine. We're not going to be in that tough situation we were in before. There's not going to be a housing crash like there was before. Like, all he's doing is just reassuring everybody. I mean, of everything. So, as far as I'm concerned, the Fed is the least important. They will literally, I mean, if anything, I think the Fed will continue to be dovish. We'll see ridiculous inflation numbers, and the Fed will just keep lying about everything. So, as far as I'm concerned, there's no time in the near future are they going to talk about raising rates, or even talking about raising rates, as Jerome Powell puts it. So, IXIC, NASDAQ, back at all-time highs. I'm not surprised at all. Basically, once we take out the 786, we expect to come back up to all-time highs. Do we double top here, come back down, retest, build strength, move on? Your guess is as good as mine. I would much rather be involved in specific tech stocks right now than the indexes. To me, the indexes look less and less appealing as the bubble continues to grow. So, Russell 2000, obviously the weakest at the 786. If we can get back above the 786, again, I think this comes back up to retest the all-time high and then continues on, assuming everything else does as well. But again, this is the least appealing of all the indexes to me. If we are going to get rejected and get that head and shoulders that we talked about too, this is where we get it at. I mean, this is literally playing out exactly what I said when I was talking about the head and shoulders. I mean, this is our shoulder, neck, head. I mean, back at the neck right here. And now look, we got our shoulder basically at the same spot. So, I mean, now your guess is as good as mine. Is it gonna manifest into the head and shoulders and break down from here? Or, are we going to see continuation back to the upside? Again, I don't decide what the markets are going to do. I just predict based on like likelihood and little clues that the market's giving me which direction it's going to go. But in all reality, I could be wrong every time, and we can still make money as long as we're looking at what's going on here and having a clear range to invalidate. If we break above the head, I think we're very high likelihood we get continuation to the upside, and this thing just keeps floating up. If we get rejected here at the shoulder and start coming back down, near the neckline, and obviously in this case, we have essentially like a left shoulder up here, right shoulder at the same level, head, but this is slanted down instead of being like potentially slanted up. So typically what happens is, if there's two ways you can show weakness on a head and shoulders, a traditional head and shoulders like this. You can either have a weak shoulder like this, and if you have a weak shoulder, more than often, it's going to sell back off and break the neckline. Or if you have a downward slanted neckline like this, because it's actually putting in a low, then it's putting in a lower low, then it could come down here and potentially put in a lower low. So the two ways that head and shoulders can be weak, in my opinion, are, we're not showing the first one. The right shoulder is still strong. We're at the right shoulder. Maybe we continue and validate the whole pattern. But if we start coming down here now to the neckline, we're essentially putting in a low, then a lower low, then a lower low again, from a high, low, lower high, and then lower low. That's like essentially a downtrend taking place. Now, again, we spoke specifically about this area right here and breaking through like that key resistance line, but that's only just a bullish retracement of the bearish sell-off. It's still internal from the head to the neckline right here until we break in one direction or the other. So again, overall, this is a bearish pattern. It's demonstrating with the weakness of the neckline that it's a weak bearish pattern. So it's more likely to develop like in a bearish direction. At which point in time, our breakdown from the bearish pattern is basically from the head down to the neckline, which would potentially take us down to like that 1800 range. Now, this isn't just going to happen, though. We're not just going to sell off to 1800 and all the other markets stay good. This is maybe giving us a clue as to what everything else is going to do, as this is the weakest of our indexes. XLE, obviously, very clearly, once again, we had this clear resistance line. We broke above it now. So what's going to happen next? Are we going to get continuation to the upside? Are we going to retest this? We have to see. We really have to see. I'm overall still bullish on this. But, looking at the knife and how powerfully that stabbed up on just this one little candle right here, not a ton of room left to run. So, again, was this just a relief rally before, it just pours back out? I mean, there's a lot of weakness in these charts that are only looks strong because of 1 or 2 days throughout this. Otherwise, how many days of weakness do we have? How many days of strength do we have? So, ICLN, the Clean Energy ETF, once again, key resistance broke slightly above, the little descending line here, but still inside of this range right here. Not ready to get overly bullish. Looks like we're starting to show a little weakness. There's like no buying volume coming in at these levels. This one looks even more bearish, like it's just ready to roll back over down to support, potentially break. At which point in time, I'd be excited to get a buy-in at like $20. So we'll have to see how that plays out. But, seeing quite a bit of weakness through a lot of this stuff at all-time highs. So what does that mean? We just go sideways for a little bit, reset, continuation to the upside, or we start rolling over. So gold and silver, obviously acting how it should, inverse to, like the dollar. At this point in time, this is starting to look like a breakout, a retest, and then consolidation. And if we consolidate long enough, I expect continuation. And to tell you the truth, if we get above that 1800 level, key resistance, 1820 maybe right here, I'm going to get real bullish on this thing, because I think after this much consolidation inside of the pattern, whichever direction this breaks in and gets like continuation, that continuation is going to last a while. If it breaks to the upside, I mean, in my opinion, it's going to break to the upside and new all-time highs. So if we're at 1800 when it breaks and we go up, 10% is back to the old all-time high, I think we very likely get an entire another wave out of this thing. And, another like 3, 6, 9, maybe a year, 2 years, 5 years. Like, I think we have serious potential for gold and silver to the upside, like physical metals. But again, I'm not ready to get overly bullish on something that's going to last for weeks or months or years when it's just kind of at like the resistance, kind of broke above it, hanging out at support. I would rather wait and not get stuck in a position like this. And, the best way to do that is just switch over the weekly and see what happens. This was an indecision weekly at the top of the range. This basically takes out any question in our mind of a break in either direction. Right now, it looks like we've broken through and we're consolidating. Let's see how the next 2 days go. Let's see how this closes out the week. If it closes out the week back below, this resistance / support at 1770, it's going to look like a rejection. Close out above it, it's going to look like, support and a break. We're getting the hard buy. We've got, 5 weeks now of bullish, green histogram action. Looking at our moving averages, if we basically like consolidate slightly higher, we're going to get the 821 cross eventually, and it's going to look like a perfect bounce off of the 89-week moving average. Perfect bounce off of it. And then just like we said, we get that bounce here off the moving average. We come back down. We get a very bullish rejection of lower prices. We leave a big wick behind, and then it gets completely bought back up, even retest the low by the wick right there in the bearish control zone after, mass amount of time in the bullish control zone, which, obviously when you see the bearish control zone pop up in the middle of this many bullish control zones, what is that? Buying opportunity, buying opportunity, buying opportunity. So in my opinion, this is starting to look pretty juicy to the upside. And again, you know, a 10% move up in gold is a big freaking deal. You know, that's 15-16% back to the highs from where we're at right now. And if we take out, you know, obviously if we retest this high after we just put in a new all-time high, I think we're going much, much higher. And, you know, if we break down like the actual gold chart and look at it, I mean, what are we looking at this point in time? Are we looking at like a 1, a 2? You know, this is our 3, and then we're coming back down for a 4. This is our 4 now, and then we're going to get a 5th wave to the upside. I mean, let's start looking at like some potential targets here. You know, if this was our target to the upside, just to kind of get perspective here, we came back down to basically like a little more than the 618, not quite the 786, and then found support. So now let's look at our fib extension target to the upside. So if we say that was the 2 down here, and then this is our 3, we went higher than the 2.618 on the 3. So we slightly overshot the 2.618. That seems realistic, you know, for gold to break out of like a multi-year consolidation to overshoot the 2.618. And then that next pullback, you know, we came down to the 236, not quite to the 382. I would much rather see us come down to the 382, especially after like a large retracement like that. But is it possible we find a bullish, you know, support level off the 236 in continuation? It's less likely. Normally we'll see at least a 382, but definitely possible. So if that is the case, and that was it, you know, it bottomed out, and now we're going to get our continuation to the upside. A continuation to the 1.618 is going to put us at $2,400. A continuation to the 2.618 and our measured move break to the upside is going to put us up at like, you know, basically $3,000 gold. I don't think that's unrealistic to see like $3,000 gold. Is it potential that we're basically playing out like, you know, this cup and handle pattern, a shorter version of what's happening with silver, where we have a large cup right here? What is the handle of a cup? It's always a descending channel, and then when we get the break of the channel, we kind of like creep back up here and put in a smaller rounded pattern, retest the previous high and resistance level, and then when we get that break, we get the break from the bottom of the cup to the top of the cup, which is our measured move up here. So is it possible gold's going to $3,000 next? I mean, I wouldn't argue against it, but could it take 2 months? Could it take a year? Could it take 3 years? Yep, 100%. But in my opinion, probably the safest savings account you could ever have, safest investment you could ever have is gold and silver. So, but that's our gold chart right there. Let's look at silver. You know, silver is overall showing a little more strength, but weak right now. It's done more of like a sideways consolidation pattern. You know, inside this channel right here, it's finding support at the channel, but it's also finding resistance at our descending trend line from the top here. Let's do the same thing and switch it over to our weekly. I think on the weekly here, you know, it looks more like a descending triangle. We have like our support here, or resistance right here at the top, and then we have a lower resistance here. We have support here, you know, and then obviously if we topped right here, that's a lower resistance, come back down to our same support line. It's going to look like a descending triangle. But if we break through here, you know, that's going to, obviously, we're going to come back up and retest this like immediately, $27. I mean, we're a buck away, so that's nothing. If we get break and continuation right here, you know, we're going to be at new all-time highs before long, 28.30, I should say cycle highs. And if we get back up to $30 here, and we can even get a decent close without a massive rejection wick, I think we're going much higher. I think we're going to reach the $35 and $50 targets back to silver's all-time highs very, very quickly. The fact that premiums have not come down over the last few months while we essentially like sold off or went sideways, I think is overall bullish for the markets and like, you know, lower level demand, like retail demand. So I think overall that's good. But we do need to be careful now. We are still well below our slope line. It never flipped over red, so maybe we save this. Maybe it flips over red and then we save it. But, you know, weekly chart on silver could go either way. Weekly chart on gold looks a little better. Let me put that back on the daily. Zag, gold to silver. You know, I talked about this specifically I've been through the situations that would have this as a breakout and continuation to the upside. After how many charts we just looked at in a row where we have this similar wedge pattern playing out, or like a descending, resistance and then a break of it, how many of those charts did we kind of like chop around for a little bit and then get a powerful move to the upside? Or we're currently doing that right now. So, more than likely what is going to happen right here is gold is going to strengthen in relation to silver based on this chart. Could it fail and push back down? For sure. More than likely, though, we push back up to like the 0.5 or 618 or the measure move. So I still think gold is going to strengthen in relation to silver. As much as I hate for that to be the case, as overall I'm more bearish on silver in the short, medium, long run, whatever, to close the 67 to 1 gap. But right now, more than likely, looks like we're going to be in the mid to high 80s, in my opinion. Maybe this fails, though, and we break back down, and this was just like a little failed breakout, and then we just continue selling back off, and silver gets more valuable than gold faster. But still looks on the weekly, to me, like we're going to see this move back up to the upside. It looks more like a consolidation and then continuation situation. Again, we are now above the slope line, multiple green histograms in a row. We got the hard buy, after bullish divergence playing out on the weekly on this chart. So we're at the bottom of the range, middle of the range now. I would expect there's plenty to run to the upside on this thing. Could it sell back off? For sure, but it looks more bullish than not to me. Platinum saw a little bit of weakness, but you'll notice that it did exactly what we spoke about. We were talking about this little channel that we drew in here with the orange lines at the top. That was a few days ago, so I think we had this wick maybe come in and tap it. We got a little continuation, another wick rejection, selling back off. We're back at the heart line now. So, we got multiple touches on the top, multiple touches on the bottom. We're at the heart line now. If we're going to see a break to the upside, why not now? Why not consolidation right here? And then we break above 1265 and retest the highs. I mean, definitely a possibility. Maybe it gets rejected here. We come back down to the bottom of the range. Maybe we even put in that low of the 4. Maybe the 4 already took place right here. But I still don't love how this looks. Very long one. Not actually the price, but the amount of time. Long one. And then proportionate to, maybe like a third to a half the length. And then, again, very long 3 and further price action to the upside. But I don't like the length of the 4 in time frame. This 4 lasted for like 2 weeks, this retracement. So I think it's much more likely that we actually see like one more stab, even if it's just down to like, not much lower, but it's just like more of a sideways consolidation to like a higher low, a B, C type situation. That's completely fine. It's completely fine. But I like to see, I look at not just the price, not just the actual like pattern itself, but the structure. And the more like symmetry, the more like textbook a pattern looks or retracement looks or whatever looks, the more reliable it is to me, because the more I think other people are going to see it. And then also we're inside this massive channel here in blue, and obviously bottom of the channel, top of the channel, bottom of the channel, top of the channel. So a touch to the bottom of the channel, even if it breaks out slightly to the bottom, even if it doesn't quite come down to the bottom, that's going to look super juicy. Bottom to the top, to the bottom, to the top, to the bottom, and then it's going to look like our next target to the upside is very likely going to play out, which based on our Fibonacci extensions, based on our previous price action on this and how it's typically tied to gold's price 1-to-1, is $2,000 platinum unrealistic? No, I think it's actually like probably where platinum should be right now. So I think there's a high likelihood that platinum jumps up to 2,000 in the very near future. And if gold goes to 3,000, maybe platinum overshoots. Platinum goes to 3,000 as well. Maybe not. Maybe they meet at 2,100 and then platinum sells off and gold keeps going. I mean, there's, tons of things can happen in the meantime. But, based on historical price reference, I think gold and platinum will be like 1-to-1 again very soon, at least for a time being. Uranium, this is the URA ETF. This one found some strength. We were talking about the cross, but essentially just going sideways. This is our bearish divergence on the daily playing out right here. Well, how did it play out? Basically sideways. It doesn't have to just capitulate to the downside. It can just go sideways, reset, and then what was bearish divergence just turned into bullish consolidation. Could it still sell off here? For sure. But the longer it just kind of consolidates while indicator oscillators cool off, the more bullish it looks to me. SILJ, okay, this is, you know, we talked about this a couple times, how this one had multiple fake breakouts, so I'm not even paying attention to the daily chart, especially after we got the breakouts here. I said I want to see consolidation and a weekly close above that line. So here we are at that line. You know, I want to see the weekly close above this, the same way I want to see silver and gold close above their resistance. If I do see that, I will take a long position on this. Very nice risk reward ratio, you know, potential to the upside here, all-time highs, etc. But right now, I'm not going to front run this thing. Looks like we're about to get the cross right here. We're still well below, still have a blue slope. This looks a lot like just traditional silver does. So we got to just let it play out. Again, you know, I'm not going to front run this stuff because, especially with commodities, when, you know, their cycles last so much longer. It's not like if you're 3 days late to the party, you missed half the move. It's the opposite. Like, you could be weeks late to the party and still catch 95% of the move if it's going to last for 5 years, if it's going to go to all-time highs, etc. THCX, this is just one of the cannabis ETFs. And again, I was just looking at these to get like more of a broader picture, as some of the individual stocks are showing divergences, bullish divergence, some are not, etc. So I just threw on a couple ETFs. Leaving the bearish control zone, getting the hard buy, looks bullish, had a decent little move up here, basically front running the 200 exponential and simple. Doesn't look bad. Most of the pot stocks had a nice move up here. So looking at YOLO, once again, cannabis ETF, you know, very clearly that same pattern. We've gotten a breakout to the upside now. On the daily, we got the close outside of the range. You know, what are we going to see? A retest, consolidation, measure move to the upside. You know, your guess is good of mine at this point in time. Could it fail? Yes. Does it look like we're getting a bullish break and potential continuation to the upside? Looks good to me. You know, and if we do come back up, we retest this high, maybe top back out and then continue to the downside, or find support, continue to the upside. Again, we'll have to see what's going on here. But, you know, we're starting to see a lot of opportunities as these charts that have been like essentially developing, these patterns that have been developing for weeks and months at this point in time, are finally developing into like a tradable range. So, you know, what do we want to do? We want to, if it breaks down past this low again and back into the range, we want to take a stop loss. You know, if we get continuation to the upside, that gives us an 8.6 risk rather, to a 24% reward. So 2.7 to 1 risk reward ratio looks good to me. It's not financial advice. I'm not your financial advisor. Markets are extremely volatile. Drugs are bad, so definitely don't trade this. But looks good to me. I mean, the risk reward is there. You know, the fact of the matter is if you take these trades enough, or I take these trades enough, and I flip a coin, whether it's going to work or not, if every time I win, I'm making 2 to 3 times my reward to my risk, we flip the coin enough times, I'm winning. So that's, you know, that's what it's all about. You know, I could be wrong. I can come on here and tell you I was wrong. I can still make money. Even if I don't make money on that specific trade, there's 3 other ones that succeeded that we do make money on. So that's what it comes down to. Caterpillar, you know, we had that bearish divergence playing out. You know, it played out and did the exact same thing we were talking about with uranium. Basically just went sideways. You know, we're just sitting at all-time highs. If we sit here long enough, we're going to start moving back to the upside, a lot like the indexes look right now. Like the Dow and the S&P, you know, basically the indicators are just cooling off while we go sideways at the top of the range. So if nobody's selling and we're at like all-time highs, we're probably just going to keep making all-time highs. And, you know, we're very clearly, Caterpillar is very clearly inside this range. So if we just go sideways for, you know what, another week, we're going to be at the bottom of the range. Well, what do? I buy support and sell resistance. So it's going to look like a pretty good buying opportunity if we just chop sideways while this all resets. And then, you know, see you at 250 next. See you at 260. All right, so that's our commodities. Let's jump over to tech real quick here. Take a look at Tesla. Matter of fact, I'm going to take a look at the comments real quick. Yeah, slam that like button. Thanks, CW. I'm terrible about likes and subscribes and all that stuff. Glad to see everybody in here, though. Welcome everyone new. I assume at this point in time, most of you guys are regulars, especially all the names I recognize. Glad to have you. Glad to have you. Why do I use bubblies? I personally, all the moving averages I use are for a specific reason. I use the traditional moving averages like the 50 and the 200. Simple, because that's what Wall Street uses. That's what traditional traders use. That's what you're going to see in all the books. You're going to see people talking about the 50, the 200, the 20, stuff like that. The 100 sometimes. I don't really like those moving averages as much, but they're still relevant because there's a lot of traditional traders in crypto markets, or, you know, when we're looking at traditional markets, obviously that's what more people are looking at. The other moving averages, the primary moving averages I use, majority anyway, are the 8, the 21, the 55, sometimes the 34, the 89, and then the 200 exponential. All those are exponentials. The 200 exponential, 377, 528, all those numbers that I use, 8, 21, 34, 55, 89, those are all Fibonacci numbers from the Fibonacci sequence. And Fibonacci just works. It works. So that's why I use those. I don't just use random numbers like the 6 or the 10 or the 20. All those are specifically Fibonacci numbers. And the exponential moving averages, in my opinion, are more important because when markets are moving, when they're sideways and stale, the simple moving averages work just fine. But when everything's moving and there's extreme volatility like there's been, especially this last year, and things are moving by like 20% and 50% and 100%, and especially in crypto, the exponential moving averages are so much more important because all they do is they look at the same time frame. If I'm looking at 200, but it's simple, every one of those 200 candles that I'm looking at on, say, the daily is weighted evenly, and then it's redivided by 200, and then the moving average is plotted in place. As where with the exponential, there's a weight applied to the most recent ones. So the candle that just happened and the price action of that candle is way more important than the 200-day old candle, the very first one that it's taking into relevance. And then obviously, as each day goes by, the least relevant, the oldest candle drops off. So it means less and less and less. But the more recent price action is more important. And that's why I like the exponentials better. And then obviously the key to my entire trading plan, my trade setup, and my technical analysis is Fibonacci. I use Fibonacci tool for measuring like percentage increases and decrease. I use Fibonacci numbers for the increments of my moving averages. And then, that's obviously a huge part of my game, which ties into like support, resistance, and all that stuff as well. So that can kind of give you an idea. And then obviously the indicators and oscillators that I use are more for like momentum, relationship of volume, smart money versus like dumb money. I use like RSI sometimes, but overall they're more for like the actual trending itself. So just to give you like the overall basics and why I use those. I think the exponentials are more important in volatile markets, as where the simples are just more traditional. And like, honestly, I want to see what everybody's looking at. I don't want to just see what I like better. I want to see what I'm doing. I want to see what Wall Street's doing, and I want to see what anybody else that's relevant's doing. So craziness, says Lazy Boy. I'm not sure what you're talking about, but these markets are crazy, my dude. Hey, good to see you. KOLS, Kols 93, Coles. Wait a minute, do you work for Coles? I'm just kidding. New Pathway, yo, what's up, man? Good to see you. No fronting for sure. Call yourself a fib expert? Yeah, man, fib is definitely my game. I mean, and there's so many times too where it plays out absolutely perfectly. Like, and I obviously sometimes these streams get cut a little bit short. I don't get into it, or I'll forget to mention something or whatever. But I mean, if you're looking at this most recent price action, just to sort of like flip back to Bitcoin for a second, and then I'll keep moving on here. What happened right here? From our top to our bottom right here, paying attention to fib levels. Before we even have the bottom picked out, we're already at that 382 level bouncing. We come back down here, bounce, finally hammer out our bottom, put the fib in place, And then, first top is at the 382, continuation to the 0.5. And now what's happening? We're just running into resistance at the 0.5 fib level. So, you can see very clearly, obviously you can't draw this Fibonacci in until we put in this bottom. So that's the first time you're able to draw it. But a Fibonacci looks much more relevant to me and much more likely that that is actually our swing low and that it's not going to get taken out. If all of a sudden we go back now and we look at on the way down to that point, how often did we interact with those key fib levels along the way before we knew they were key? Because now look, we have support, 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 breakdown, find support at the next level, resistance at the previous level, support, support, breakdown. This was obviously a key level because we find support here by closes. This was obviously a key level because, that's where the wick sold off to. And then we come all the way back up, support, support, come back down, support here, come back up, resistance here. I mean, this is clearly support here, resistance here. This fib level was clearly being respected by algorithms and bots before the bottom was ever put in. So what does that mean? How is that possible? Am I just hindsight trading a Fibonacci target because now it looks perfect? No, they have a clear target in mind. These algorithms have a programmed target in mind that they're going to push the price action down to. And once they hit that target, then okay, check, we did it, check it off the list, and now we can hit our target to the upside. And the target to the upside is probably going to be relevant to a fib level that was a key on the move to the downside. So that makes this just exponentially more relevant now, because now what am I looking at? Well, we topped at the 0.5. We were at the bottom previously. So we're probably going to come back down to the 236, or we're probably going to move back up to the 618, or maybe we only move back down to the 382 and then we move to 786. But now these key fib levels are extremely important. So I'm definitely paying attention to all of them. And then if we just go back and scroll back a little further, we can look at our next key swing, which was that next swing low, which obviously this is the most relevant swing low, the one that just happened. This was the previous most relevant swing low, the only one we had before this one. I mean, obviously we had this one, but as soon as we took that out, it's no longer nearly as relevant. So now let's draw this one in place here, and we will turn that one green, and we can kind of look at that one. Well, I'm going to delete this yellow one just real quick so it doesn't distract. Well, what happened with the green one? Okay, look, from the bottom right here to the top right here, we sold off initially to the 0.5, bounced that. Then we sold off just shy of the 786, bounced that. Then we came down and tagged the 786 with a wick. So you think that the bot was trying to hit the 786 exactly and did? Yeah, probably. I would say that there probably is a programmed algorithm that had this exact target in mind. Therefore, this target was already in mind. Okay, and maybe it gets invalidated. Maybe it doesn't bounce up right here. Maybe it goes down to the 886. Maybe it takes it out. But these levels are clearly relevant along the way. This is very clearly support right here. And then obviously once we bounce that area, what happened? Well, we move back up to a 0.5, blast through it, find support, come all the way up to the 382, rejection, 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 rejection. Well, the more times we get rejected, the more likely we are to break through it. So are we coming up to 236 next? Are we coming back up to 59,000, 58.7? Maybe. If not, where are we going? To the 0.5 at 52.8. So now we pull back up our old fib. Pull back up our old fib and we see the 0.5 and the 382 line up perfect. The 382 and the 0.5 down here line up perfect. And then here we just are looking at, okay, are we making now an inverted head and shoulders? Because if we go back up to the 682 or 618 rather, and then we find resistance, we're probably going to come back to the 382. And then look, we have an inverted head and shoulders potentially getting ready to play out here. If we don't make it back up there, what's that going to look like? It's going to look like a rejection. And then we're probably coming back down here. And we either come back down to 50,500 or we take out this low and continue to the downside. And this was just a relief rally. But all this stuff lines up perfectly. And again, you could say, oh, well, you didn't have this yellow target yet. You can't look at the relevance of this. Well, okay, but what could we do? We could pull this yellow target out to the 618 and assume it was going to bottom out at the 618 here. And then we could look, well, was that relevant on the way down? Yeah, it looks pretty relevant to me. So that was definitely a possibility. Well, once that got invalidated, or, if we were just experimenting and we said, well, what's it going to look like if we hit the 786? Oh, well, that looks pretty damn relevant too. So that's probably a potential target. And then let's pull it down to the 886 and see what would that look like. Well, I mean, looks pretty damn relevant to me. Support right here, resistance right here. You know, this isn't just luck or magic. Like, there's a reason Fibonacci numbers are so important, because you can see very clearly that if this now got rejected exactly at the 618, find support exactly at the 0.5, does it look like there's a possibility we're coming back down here lower to the 886? I mean, shit, it looks like it to me. It damn well looks like it to me. But, you know, again, that's just something to look at before it happens, so we can have an idea. If all of a sudden it bursts to the upside, oh shit, what happened? We weren't expecting that. If all of a sudden it breaks down to the downside, oh shit, what happened? I wasn't expecting that. Well, we're expecting it now, regardless of whether it happens. We're already prepared. We already have targets in mind. We already have key fib levels in mind before the fib levels even think about happening. We're already paying attention to who runs the bots, who programs the algorithms, who moves the markets, the whales. So what do we want to do? We want to know what the whales are doing. We want to know what the market makers are doing before they do it, so we're not surprised, making snap decisions, trying to buy breakouts and sell breakdowns after they happen. So here we got Tesla. We'll get into our tech sector here next. You know, I mean, it topped out exactly where we said. Has not been able to get back above the 618 since then. It's selling back off to our target. As far as I'm concerned, 661 is a buy. You know, if we invalidate this trend line right here, you know, it's going to look worse. But Tesla looks worse than tech does right now. Most of the key movers in the tech sector look worse than the ETF does right now. I don't like that. Maybe they're just overvalued. Maybe it's time for the little companies to run. But I don't like it. Overall, looks bullish inside of this retracement, but still looks bearish to me. After that sell-off and the overall weakness it showed, I want to see these big movers taking out their all-time highs. NEO, you know, got that burst out of the triangle, but still, you know, this is still just a bearish pattern to me. Especially the Chinese stock market looks to me like we basically just got a bunch of like dead cat bounces, like little mini rallies. Some look worse than others, but Chinese tech looks the worst right now out of the tech space. Alibaba, you know, this is exactly what we're talking about. You know, that little bounce basically just to save the trend line. But, you know, until we really see, I'm on the weekly right now. So if we move this slightly over and just go like weekly bottom right there, a little touch right there, a close right there, a close right there, it looks like we're basically just saving this. So to me, the green trend line has been going on for the longest, so it's the strongest. The red trend line is, you know, basically just the sell-off consolidation phase. So more than likely, I think the green trend line holds. So that's a buying opportunity. But I want to see the red trend line break first before I get into this position. And we could easily see both happen. We could see the green sell off slightly lower. But as far as I'm concerned, you know, we already hit our target on that wick back here. So do we got to come all the way down to the box? No, this is our buying area where we're looking to take buys the whole way. You know, do we got to touch the 0.5? No, we don't. But is it going to look much more like clockwork, much more, you know, again, structurally, I want to see it bounce the 0.5 perfectly. And then that to me is buying opportunity, continuation to the upside, massive upside targets on Alibaba. Baidu, you know, we were basically forming this descending broadening wedge, got the break, kind of consolidating. What does this look like? What does this chart look like? It looks like the gold silver ratio. You know, we're basically putting in this wedge right here. We get the break out of the wedge and now we're kind of going sideways. But overall, should be bullish. Hasn't played out yet. We'll have to see how it plays out. Could easily fail right here, come back down to key support, or we get that measure move back up to a lower high and then continuation to the downside. Apple, you know, I have no position on Apple, no opinion on Apple, I should say. No like open trades, obviously investment in. Basically, if I show you guys a stock, a crypto or whatever, I'm probably invested or trading it currently. Don't really call my cryptos investments in the same way, aside from like Bitcoin and Ethereum. But Apple, to me, you know, we hit our trade. We're waiting for a new trade setup to develop. But in the meantime, I don't see, nothing has happened. We've basically just gone sideways at the top of the range. You know, still potentially getting ready to lose the bullish control zone. Multiple red histograms in a row, hard sell. it looks more than likely to me like Apple's going to come back down to like 126. I would much rather be a buyer at 126 at the bottom potential of the range than at 133 hoping for new all-time highs. We're basically just buying the middle of a range with there's no advantage in my opinion right now to take a position. Pinterest, oh man, did this one really shit the bed. This is exactly what I was talking about too. We took the Pinterest trade to the upside, worked out beautifully. We called the Pinterest trade to the downside, the rejection off the top of the range, the horrible, horrible rejection wick right here. I specifically told you we could take that same trade again, but I wasn't in a hurry to take this trade back to the upside off of this, because this is essentially what we're expecting to happen in the tech sector. Everything looks like it's just going to put in higher highs and then move to the upside. And then what happens? Pinterest just completely shits the bed. I mean, broke down. I didn't even see this candle at first when I looked at the chart. I mean, a gap down, a break of the very clear ascending support, massive gap down, takes out the low, retest the previous low right here. I mean, what's this thing going to do right now? Maybe it shows some strength, comes back up, fills the gap, and then gets rejected and sells back off. Starts looking like lemonade, breakdown from the range, come back up, retest, and then just completely dumps out of the range. New all-time lows, touches the 200 exponential or simple. I mean, I don't know. I don't know what's going to happen right here. But this right here, this is as much of a red flag as this candle right here. This was a red flag going off. Sirens going off. We are under attack. This right here, same thing. We found support at a key level, a key fib level, a previous level, but this is worst case scenario in my opinion for Pinterest. Looks like death right now. But again, we could get a reaction rally back up here. I look at that as the potential to exit your position. Zoom, it's done nothing for weeks. It's just going sideways. I want to see this thing break back down, and I'll look for a buying opportunity from then, or I want to see the thing break to the upside. Right now, it's like Apple to me. There's no trade to be had. It's not bullish. It's not bearish. It's just in a long consolidation pattern. This thing has been consolidating since mid-October. So I don't expect anything to happen anytime soon. And when it does, I'm sure we'll have plenty of days to look at it. Maybe it gets one of these massive green or red candles, at which point in time I'll pay attention to it. But there's no volume coming in. There's no, patterns forming, no price action forming. It does not look good to me. It's below the 200 exponential. It's below the 200 simple. They're starting to lose their slope. In my opinion, this thing keeps grinding lower until it doesn't. SMH, semiconductor ETF. Again, and if you don't know my opinion on semiconductors right now, I'm overly bullish on the space of semiconductors for the next couple of years. But I am not bullish on individual companies because there's too much that could happen right now. Like maybe you want to get behind certain ones, but there's a lot of stuff going on right now. Because like what's one of the main ones? Taiwan semiconductors. What's going on with Taiwan and China right now? A lot of craziness. What's going on with future of semiconductors? Are we going to see American companies blow up and like explode, and we're going to start making them here in the United States? Probably, maybe. Are we going to keep getting them from overseas? Probably, maybe. Is neither one going to be an option? Maybe. I mean, we just got to see. But I would rather that's a space where I'd rather be invested in an ETF and cover my bases, because who knows what's going to happen. Nvidia blows up, Taiwan Semiconductors blows up, the ETF blows up, but an individual stock doesn't. I mean, you just want to make sure that you got the space covered when you're bullish on the space versus, the last thing I want to do is bet on a space that crushes it over the next 5 years, but I picked the wrong one inside that space. So I don't get the one that blows up, or the overall space blows up and I pick the one that does horribly. So in my opinion, ETFs on semiconductors look way better than individual semiconductor stocks. As where other sectors, like we spoke about earlier, like the tech sector, or a lot of the other ETFs, I would rather be in specific stocks based on fundamentals and technicals than the ETFs. So specific reason why, if you're going to look at these charts every day, there's reasons to get an ETF still. There's reasons not to. So SMH looks good, consolidating at the top of the range, putting in consistent higher lows. Is it going to shit the bed like Pinterest and we get one of these better, entry levels? Maybe. But right now, looks like bullish consolidation. We did put in some divergences between price action, but right now, there's no real trade to be had, in my opinion. If we come down here to one of these key levels or start to develop like a little more of a chart pattern or something, we can see. But it's basically just consolidating at the top of the range. No heavy selling pressure coming in. Volume is descending. Looks good. Looks good to me. Whole space looks good. So I'm going to jump back over into the comments. I do plan on keeping this one a little shorter than usual today. I think I'm going to try to shoot to keep all these streams between 1 and 2 hours, ideally. Yeah, Fibonacci is in everything, lazy boy. 100%, man. Don't use smooth moving. Yeah, I mean, you can use simple, you can use exponential, you can use smoothing averages, you can use whatever you want. It's just what works the best. And in my opinion, I use what works the best and also what the most people are looking at. So that's why, in my opinion, horizontal supports are so much more important, or resistance, than like ascending or descending, like slope supports. Because everybody's going to see that same support level in the exact same spot. You and I might draw our slope support line a little differently. I might be using Fibonacci. You might just be using clear support and resistance, but don't use Fibonacci. But the likelihood of us looking at the same level is extremely high when it comes to certain things. And that's what I'm looking for. I'm looking for a consensus within the market. That's why I do technical analysis. I'm not looking for magic. I'm looking to find what everybody else is looking at. Because in the end, what is this? It's a giant psychology game. If you and I see a key support or resistance level at the same spot, the likelihood of that being a top or a bottom is very high, as opposed to just 100 people looking at a chart all different and nothing lines up. Hell yeah, man. Always glad to share my insight, tips, etc. Yeah, it is definitely wild, man. Fibonacci is amazing. And if you look at like the actual, if you do like look into actual like fib theory and whatnot and start reading about it, and you see it's in like beehives and seashells and like all this stuff in nature, it actually makes perfect sense, the relationship between science, nature, and then like, in the markets, you're basically looking at it as quote unquote a science, or quote unquote the nature of the markets, or nature of science of psychology, or the science of psychology, or whatever. And then you throw like Dow theory in there too to get like the 0.5 level, and you basically have like the perfect tool. Because, and that, that's where you can use like the quote unquote 50 moving average instead of the 55, or the 50% retracement instead of like the 618 or the 382. All that is like Charles Dow theory, which obviously Charles Dow, Dow Industrial Average, he obviously knew what the hell he was talking about. But if you go back and read like some of his older books, you can see obviously why that kind of gets like grouped in with like the Fibonacci percentage retracement and like psychology, etc. DOJ is going heavy into regulations for Bitcoin. Yeah, I mean, we'll see. They've been talking about it for a while too, though. Still haven't really done anything. Stuff's going on behind the scenes. Takes forever for them to do anything. We'll have to see, man. But in my opinion, I still love crypto and the idea of it. But let's be real. Crypto is mainstream now. Therefore, crypto is no longer like cyberpunk. It's no longer alternative. It's just part of the system now. So what's the alternative to the system? I don't know. Is it cash? Because it's unregulated? Because it's behind the scenes? Because it's like private? Is it gold and silver? Because they're technically still cash? I mean, that's how I look at it. To me, and the whole 21 million Bitcoin thing is like, at this point in time, like, is that even really an argument anymore? Because like, derivative markets on top of gold and silver, so does supply and demand really matter anymore? Because there's like 1 to 500 paper contracts for each real contract? I mean, not really. doesn't really matter anymore, right? So all of a sudden you're looking at gold, which is what Bitcoin is built off of, the idea of supply and demand, the idea of stock to flow ratio. Well, once there was derivatives built on top of Bitcoin, does 21 million Bitcoin even matter anymore? Because there could be 21 million Bitcoin, but there could be like, 210 million like derivative contracts based on top of Bitcoin. So now there's derivatives on top of it. So does it just become the same as silver and gold? Like heavily manipulated, like derivative actually like controls the price more than the actual price controls the price? I don't know, man. But to tell you the truth, I mean, it's hard to argue that the idea of gold and silver isn't what Bitcoin was based off of, because it obviously is, especially gold. And then on top of that, that the problem with gold and silver is price discovery, which was heavily manipulated by derivatives markets. Therefore, if Bitcoin now is essentially digital gold, based off of gold, designed off of gold, stock to flow ratio off of gold, and then all of a sudden you have derivative markets built on top of Bitcoin. So now that 21 million is really like infinite, because you have, and people don't understand the difference between the derivative market and the regular market is the derivative market doesn't derive demand. So it's essentially fighting the traditional markets. So if I'm going to say I'm going to go buy one Bitcoin and I buy that Bitcoin, it drives price to the upside because there's demand for Bitcoin. If I buy a derivative contract that is not for an actual Bitcoin, or I buy a gold contract that is not for actual gold, what am I doing? I'm not actually driving price. I'm not actually driving demand. I'm just betting whether the price is going to be higher or lower in the future. And then when that contract expires, if I'm right, I make money. If I'm wrong, I lose money. And maybe I just roll that contract over. So even if there was going to be demand, I never actually buy that Bitcoin. Or there was going to be, supply, I never actually sell that Bitcoin. I just bet on the price of Bitcoin. So now if we have a bunch of people betting on the price of something outside of the actual supply demand like element of like that actual good, you now have supply and demand that are being moved by actual buyers. And then you have a derivative market, which is being moved by people betting on whether the price goes up and down, but they're not actually affecting whether or not price goes up and down, unless there's people arbitraging both, which definitely happens as well. You'll see like a lot of times as a futures contract or as a derivative contract is getting ready to expire, market makers will move the price in the direction that is least favorable to the most contracts. So they essentially will make money by pushing the price in the direction that will essentially like allow a futures contract or a derivative contract or whatever, or bet to essentially like not pay out. So if all of a sudden like everybody's going to get paid if Bitcoin stays above 55,000, it might be statistically cheaper for like a market mover or market maker to push the price down below 55,000 so those contracts don't get paid, so those bets don't get paid. So like regardless of whether they care about the direction of the price, there's like an arbitrage move to be made by having more futures or more options or more bets expire worthless or lose those bets. So, there's an argument to be made that all the reasons that we were supposed to, or all the reasons that we all argued that we loved crypto in the beginning, no longer make sense. Now crypto is regulated. Now crypto has derivative markets, so supply is no longer relevant. Now crypto is mainstream. Now crypto is all the things. It's government controlled, it's bank controlled, it moves directly correlated with the stock markets. I mean, is it still crypto anymore? Is it still what we wanted? There's no privacy. There's no direct transitions on Bitcoin anymore. We're not like transacting with each other. We're using it as a store of value. It's supposed to be like, I mean, I don't know. There's a lot of arguments that could be legitimately made in both directions. That now crypto's mainstream, so now it's good because of adoption. Well, now crypto's mainstream, so now it's bad because of adoption, because of regulation. So kind of goes either way, man. Kind of goes both ways. And in my opinion, we're kind of losing what crypto is supposed to be. So S&P just smashed 4,200. Yeah, like I said, there's no reason to get bearish on these markets until there's a reason to get bearish on these markets. It's like I said, if we're, you know, for a year, these markets have been going up. For months, they've been making all-time highs. So you really want to be the guy who gets on every day? Think about how stupid some of these people sound right now, talking doom and gloom for the last year while markets only went up. Everything has just gone up for a year, and people are saying, today's the day. Today's the last day. Today's the last all-time high. Today's the last pump in these markets. Tomorrow, it all comes crashing down. I mean, you got to be a moron. Why not just trade the momentum? And then you could be like, oh, look, momentum shifted now, so we probably topped out. I would much rather be that guy than the guy who gets on every day with conviction and just says, this is it. It's all going to end tomorrow. All of a sudden, the Fed is going to stop supporting the markets. All of a sudden, all these government programs, all this free money is just going to stop. All of a sudden, you know, they're not going to be able to get the next stimulus dump through. They're not going to be able to get the next quote unquote infrastructure through. They're not going to be able to get the next tax breakthrough. They're not going to be able to get, I mean, come on. More than likely, this whole system is going to keep working the same fucked up way that it's been working for months and years and decades. Okay? Like if you don't want to call a daily trend ending or a 4-hour trend ending, why you want to call a 40-year trend ending? Why you want to call the end of the dollar? Why you want to call the end of the financial system as we know it? Why you want to call the end of any of these things? I mean, what's the probability of you picking the end of a 40-year trend? Even if you pick the right year, it's 1 in 40, and you're going to be wrong for 11 months leading up to the month that you're right. No, thank you. I mean, come on. Yeah, the fib spiral is key, man. Kay Olson says, yeah, that's when I found your channel. I stood out because of the crazy connection. I don't have any money invested right now, but I watch anyways. Got to start soon. Yeah, I mean, you're smart, man. Learn. It's like anything. I don't just go to a car dealership with my money in my pocket and say, I'm going to buy a car today. No, you go look around. You learn about the cars. You learn about the salespeople. You learn about the tricks they play. You learn about, you know, why different stuff's important. And then once you're educated, you make your decision. And one might even argue that, you know, you do a little extra homework beforehand. Maybe you go out and rent the car. Maybe you put a down payment down and you take it for the weekend. You know, you're just doing your research. That's smart, man. And honestly, I think that realistically, no matter what markets you're looking at, there's going to be a better chance to buy. I don't think that we're right now putting in all-time lows for anything. And if you want to argue what's at the low of the cycle right now, well, what's not making all-time highs? What's a value investment right now? What's not making all-time highs? Okay, crude oil is not making all-time highs. Silver is not making all-time highs. Gold is pretty close, but not making all-time highs. Uranium is not making all-time highs. You know, copper, not making all-time highs. I mean, most everything else is at all-time highs. So if you're looking for value, there's a lot of great value plays. If you're looking for momentum, right now is kind of a sketchy opportunity because most everything has momentum to the upside, but the momentum is waning. So I would rather look for something that's either undervalued or something that's in a strong momentum play as the momentum shifts. So you can get in early and ride it up. So I don't think you're doing, I think you're doing way better than most people are. And even if you do want to start trading or investing or whatever, you can start paper trading whenever you want. You know, like looking at charts, looking at investments, whatever, and you can paper trade on TradingView, or you can paper trade on like Robinhood or Webull or something else and start to get an idea for it, start to get an idea for dollar cost averaging, you know, what trades would have been right, what trades would have been wrong, etc. So, and you know, this is obviously not financial advice. I'm not your financial advisor. Markets are extremely volatile, but you know, the more research you do, the more success you're going to find. Yeah, crypto has become literally K Ritz, or oh man, I always do that. K Olson and R Kits threw me off that time. R Kits. Crypto has literally become everything it was meant to replace. It is literally just another tool in the manipulated financial institution. It is more regulated than dollars. It's equally or more traceable than your credit card transactions. Everything's on the blockchain. It's all out there for you. There's more KYC. There's more anti-money laundering practices. There's more everything. It's actually, in my opinion, more regulated than anything, which in the end, all it does is just push me back stronger and stronger towards the argument for cash. Because I'm not like a contrarian, but at the same time, I don't want a government like, no offense, communist China's government that knows everything you spend your money on, everything you look at on the internet, what you search, what you Google, what you buy, what you research. I don't want it using facial recognition software to tell me I crossed a street illegally, and a social, welfare / construct system where I'm penalized for not being a good person or looking up bad things on the internet or buying unapproved items on the internet or being, mean to people or whatever. I don't want that. So to me, it makes me think, well, I'd rather have cash. And it seems like they're getting rid of cash or devaluing cash. So what's the best way to have cash that's not US dollars? Gold and silver, physical, in my pocket, in my vault, in my, storage somewhere. The argument for gold and silver is going exponentially through the roof for me over the last year. Meanwhile, gold and silver have been going down for the last few months. So, I don't got to tell you how I feel about gold and silver physical. So, Commander Corn, what's up, brother? Good to see you. I think ETH and DeFi makes up for some of what the anarchists lost with mainstream Bitcoin. Yeah, DeFi definitely has some potential for the future. But, if you're talking about regulation, what's going to get regulated? Decentralized finance, obviously, because they don't want you using it. And, like smart contracts where we can interact with each other. Like all the stuff that crypto is supposed to be good at, that it's losing, that's what's going to get regulated. Privacy coins and decentralized finance are going to get hit with the regulation more than anything, in my opinion. And Ethereum is, Ethereum's great because it's a platform everything's getting built on top of, which is awesome. But, you could argue that at least until ETH2 is mainstream and all the little problems are out of it and, everything's been taken care of, that it's not working right now. Because, the fees on, you could say the same thing about Bitcoin. The fees on Bitcoin and ETH right now are just ridiculous. They're almost unusual. The fees on DeFi, I don't know, I haven't used it recently, but Uniswap and stuff like that are just absolutely ridiculous. Unless you're transacting massive transactions, then yeah, you're paying less than percentage fees. But otherwise, you're probably paying more than a traditional settlement fee for a credit card or something like that, or a PayPal transaction. So a lot of the point is kind of being lost. He said, they say bull markets can make you money, but bear markets can make you rich. We're sticking around until nobody's paying attention again. Yeah, exactly. Well, and if Bitcoin keeps doing what it's doing and doing these 4-year cycles, it's going to be amazing, because you can just keep using those 4-year cycles to keep accumulating, and it'll leave it somewhat uncorrelated to traditional assets. In my opinion, the best argument for Bitcoin, the best argument for crypto is the correlation to traditional markets in general, that they always go up. But overall, the best thing is the 4-year cycle. If we don't see the 4-year cycle playing out, is when Bitcoin becomes useless. Because wow, yeah, you could bet on Bitcoin or you could bet on anything else, but we lost the one thing that made it different. The halving cycle is essentially the most important thing, in my opinion, right now in Bitcoin. Especially as derivatives essentially ruin the scarcity of it. What's going on, Peter? Good to see you. Reading that the Russians have stopped holding dollars and trade using euros. You see other countries following this trend. Oh, 100%. It's happening all over the place. That's the main argument for the Belt and Road Initiative. China, Russia, all these different countries are essentially trying to decouple from the dollar. And that's huge. I don't blame them. If you're in charge of the world reserve currency and everybody has to settle in it, and then you stop producing stuff and just basically inflate the currency and then just use it to buy all of our goods, eventually after a while, I'm going to get mad at you because I'm like, look, dude, you're just printing off those dollars like behind that little wall over there and then bringing them out. And then you're buying my goods from the bake sale. You're buying up my cookies, my brownies, my cakes, my pies. But all you're doing is running a printing press back there. So we're like using ingredients. We're like working hard to make these goods. We're packaging them up, making them nice. We're bringing them to the bake sale. And you're standing right over there printing off dollars, buying them. Eventually, what's everybody going to do? Say, well, let's just trade goods for goods. Or let's come up with another way that we can transact without using those dollars because we can't trust them anymore. And I think that's exactly what's happening right now. And that's why Janet Yellen was in such a hurry to do like the whole IMF money drop, because she's trying to keep the world happy while the United States prints ourselves into oblivion. Because the truth is, regardless of what other countries want to do, as long as we're the world reserve currency, if we're printing money, everybody else has to print money or they lose out. Because if they don't devalue their currency at least the same rate as we do, they lose out because we can use the more dollars that we made to buy more goods from them. But if they print the same amount of money and devalue their currency, they essentially just keep pace with us. But if they don't devalue their currency, we get more for less because we have more dollars to buy the same amount of goods, or we have more dollars to buy more goods. So if they print faster than we do, the opposite happens. So that's why people say it's quote unquote the race to the bottom. Because if all of a sudden another country comes out, like for instance, Turkey, and they devalue their dollars like so freaking fast that literally they're not worth anything, they have the same ability. They can spend those dollars as fast as they can, buying up as much goods from somebody else as they want, because they're just printing the dollars. They're printing the Turkish lira. So it loses its value because people are like, well, I don't want that anymore. It's worth 20% less every week. Well, the difference is when the U.S. does it, we're like the basis for everybody else's like exchange rate, and everybody has to settle through us. But as soon as like you have countries like, you know, Russia, China, Iran, all these countries saying, look, we're not going to use those dollars anymore. And you could argue that that's why crypto has exploded, is because, all right, not to get like too deep into like the whole conspiracy thing or whatever, but all right, there's all these extra transactions on the blockchain. What's happening? Why was crypto pumping? Why did it take so long to pump after everything else pumped? Well, was China, was Russia, was Iran using crypto to circumvent the US dollar trade system? Gee, I wonder. Probably, yeah. Probably 100%, yeah. I honestly think China, Russia, and Iran have been transacting through cryptocurrency with each other to circumvent the dollar, to circumvent the SWIFT system, to circumvent, you know, taxation, regulation, you know, overbearing U.S. I mean, maybe I'm wrong. Maybe they weren't using it to circumvent tariffs, but sure looks like it to me. Like, I think when the U.S. argues about money laundering and crypto being used in the black markets, I don't think they're talking about average Joe going on Craigslist buying, you know, drugs with it. No, I think what really is happening is countries are circumventing the dollar. They're circumventing SWIFT. They are literally going behind the scenes to do this stuff. That's what I think's been going on. And, you know, there's proof that shows that. So, I mean, we'll see. We'll see how it all plays out. But I think we will look back at what's going on and what this bull run in cryptocurrency has been and everything that's been taking place. And we will say, oh, okay. So I think when the regulation comes out, if the DOJ and the United States and all these countries, you know, or basically like we come in and start regulating, I think we're regulating against other countries because we're trying to grasp that power that's being stolen away from us. But I think that that's a lot of the reason why that we went into like that whole like quote unquote new Bretton Woods agreement. And we went out there and said, here's money for China. Here's money for everybody. We're so sorry. Like, yeah, we're printing, but everybody else can print too. Like, I think that's the United States trying to hold on to that power, but they're seeing it slip away. And I think that the biggest danger to the world, or I mean, maybe it's not a danger, depends where you live and how you look at things, but you know, China and the whole like Belt and Roads and everything, like they're basically right now building a giant network through like 75% of the population and like the world of like commerce and the future and everything, like direct supply nets, direct supply chains, direct roads, like infrastructure to essentially transact with 75% of the population of the world without the United States involved, without the middleman. They are cutting out the middleman. They are doing what tech and Amazon and online purchasing has done to retail in this last like couple years or a couple months. They're cutting out the middleman. They're taking out the tax guy in the middle. And who is that? That's the United States. Well, at some point in time, either the United States is going to fight to retain that power, which I don't know if they could even win that fight, whether it's, you know, regulations or, you know, all out war. I don't know. That's a battle that could be won. So in all reality, what happens? I think probably the United States is going to have to restructure to actually like build and make and create value again. So what does that mean? That means probably our government's going to probably have to get way smaller because it doesn't actually do anything. It's a giant tumor on society and it's not providing any value in relation to the costs that it's taking. So I think our government has to get much smaller. I think our social welfare programs are going to have to get much smaller. And I think we're going to actually have to build infrastructure and build jobs and start manufacturing. Our economy slowly over the last like 30 years has shifted to like an economy that builds and creates nothing. All we do is serve the rich. Like the whole entire industry is based on service. Like the United States economy is based on like service. Like what does the United States do? What do we build? What do we manufacture? What do we ship to other countries? Like we build war and then we service rich people with like, I mean, it's like indentured servitude of the masses. I mean, you could argue that, oh, manufacturing's going up. I mean, is it going up enough that we're going to start exporting goods to other countries to where we're like useful in like the world structure without strong arming people with the threat of war or forcing them to use our currency? We're pretty far from that. And I'm not sure that our politicians, our government, or even the people know that the difference in what we're doing versus what we need to do to be like a functional portion of society is going to like meet up even close to each other. Because I think that's what people don't realize is. I think people don't realize that in order for the United States to have essentially underproduced the amount of goods we've consumed for the last 30, 40, whatever years, you could argue more than that, we're basically abusing our trading partners because we're consuming more than we're producing and we're just middlemaning transactions is the only way we're getting by. So we're basically threatening people or middlemaning transactions and taking a cut, but we're providing no actual value. So at some point in time, people are either going to say, hey, we don't need your protection anymore, or hey, we're not afraid of you anymore, or hey, you're not contributing anything useful, so we're not going to play with you anymore. And I think that's what's happening right now. That's what's happening clearly with some of our, you know, I don't want to say enemies, but, you know, Iran, some of the Middle East, you know, China, Russia. That's a decent amount of superpowers that are not on our team that are circumventing our system. So how long before other people start to get on board with that? Or even if they don't get on board, what if these other countries just say, oh, well, it's cheaper to just directly interact with China or Russia or the Middle East or whatever. So we'll just still interact with the United States with the dollar, and that's cool and everything, and we'll still do that. But we'll also do this system too. So then half of all transactions, instead of all transactions going through the dollar, now only half the transactions go through the dollar. It becomes much less relevant. It has much less power. it's basically, in my opinion, the transition between the United States, quote unquote, superpower and Chinese future superpower, etc. So, I mean, I don't know. Maybe you're afraid of communism taking over. Maybe it's more of a communism democracy. Maybe you're not afraid of it at all. Maybe the lines are blurred in the United States anyway. But in my opinion, there's a massive power shift happening right now. And I think that part of this huge run up through cryptocurrency is because of that shift. I think that there's countries using crypto to circumvent the SWIFT system, the US dollar, right now. And I think it's just a matter of time before the digital yuan does exactly what that's doing. And then all of a sudden the bubble in crypto is no longer needed. There's no longer all these transactions. There's no longer, a reason for it, because the Chinese government would much rather have full control over the system than be using Bitcoin or crypto or whatever to transact on the side. All they've been doing is just, I think they're setting it in place. They're building it. They're building the network, creating security, the centralization, everything they need. And, you could argue that they already control Bitcoin. I mean, they're mining like 60 or 70% of Bitcoin in China anyway. So, I mean, who controls China? The government. So, who controls the mines? Bitcoin mining? The government. Who's buying more gold than anybody? China and Russia? I mean, it looks like their power shift is already taken place or taking place. Yeah, I mean, it definitely looks like the elites have for sure, like, just went on with the whole China thing. And I mean, there's arguments inside, like the new Bretton Woods agreements and the IMF stuff and everything, that, like, the new world order will be centered in China. Yeah, I mean, the whole economic shutdown was obviously a debacle for sure. I mean, you could just argue that the whole thing was a conspiracy, or you could argue that you don't let a good crisis go to waste. It's irrelevant, in my opinion. The fact of the matter is that there's a massive agenda playing out based on what's taking place. Because you could look at the numbers and, I mean, say, oh, well, there was 500,000 dead people in the United States, which is definitely a lot. But maybe those numbers were hyperinflated. Maybe they weren't. But only 50,000 people have died since then. Maybe it's all this vaccination. Maybe it's not. There's still tons of people dying in India. They're at like all-time highs. A lot of other places, there's still like a serious pandemic. But in my opinion, like, I mean, did it just take longer to spread? I mean, I don't know. We don't know any of this stuff for sure. It's all just like a bunch of like question marks. But I can tell you that we didn't handle it very good. We didn't handle the crisis very good. We didn't handle the markets very good. We're not handling anything very good. Who is handling it good? I mean, I don't know. Maybe argue China is. Yeah, I mean, the truth is, Commander Corn, is like, what's the difference between a conspiracy and the truth? Well, whether it was proved or not. Like, a conspiracy is a theory before there's any proof. It's no longer a conspiracy once it's proved right. Then it's just like history. So how many conspiracies have become history? Probably like 50% of them in the end. You know what I mean? Because it all starts off as a conspiracy and then eventually it's true. I mean, you could look back at all kind of stuff and argue it was a conspiracy or it was an inside job or whatever. You don't find out about that stuff till way later anyway. It's like JFK assassination. I don't know. 9/11. I don't know. COVID. I don't know. But the fact of the matter is like, there's enough stuff that points you in one direction or the other that tells you all those things were definitely, how do I put this? They were spun by important people and used for the benefit of their agenda. So whether it was a conspiracy, whether it was an inside job, whether they were in on it from the start, the fact of the matter is important, strong people are using those things to push their agendas. And that's, so is it really a conspiracy or, I don't know. Weird situation right now. But this is definitely, and that's where the opportunity comes in. We're definitely at a position right now where the whole world is going to change. We're going to look back at this in 20 years or 50 years or 100 years and go, holy shit, that was an inflection point. So in my opinion, you know, are we at the, and just so conveniently happens to line up with the 40-year cycle in bonds, you know, the 100-year cycle in, you know, from the previous like Great Depression, like crack up boom, like all this stuff, the 10-year cycle in, you know, markets, the housing cycle, all these cycles just lining up right now. The fact of the matter is, the most important one to me is the 100-year cycle. You know, if you look at the 100-year cycle, well, 1920s, we had a bunch of crazy stuff, huge run up, roaring 20s, 1930s, massive depression. So could we push on for another 9 years of just craziness, like explosive prices? Hell yeah, we could. Could we have recessions inside that nobody talks about? They only talk about the Great Depression that follows in 2030 when everything collapses and there's like wars and depressions and famine and all this stuff. 100% we could. And that's what it looks like to me. So the people that are trying to call the top right now, I'm like, you might be off by 9 years. So on a 100-year time frame, if you called the top in 21 and it didn't happen until, you know, the depression happened in 1930, you were off by 9 years, but give or take 10%, you were right in the 100-year cycle. But, you know, if you're trying to call it day by day, week by week, month by month, you're going to look like an absolute moron because you're going to be off by, you know, 11 months or 9 years. But were you still right? Yeah, you were probably still right. But it's like the whole bubble thing where a bubble can just keep blowing and keep getting bigger and bigger and bigger. It doesn't have to pop just because you see it's a bubble. It can keep getting way bigger than you ever thought was possible before it finally bursts. But the important thing is recognizing it's a bubble and positioning yourself accordingly. So that's how I look at it. So, you know, could any one of these markets top out any day? Could some of them have already topped? 100% for sure. But, you know, are you going to be able to functionally trade that accordingly? Are you going to be so right in your conviction that you're ready to bet on it and sit on the sidelines? Because, like, my main argument is people that are bearish on the stock market for the last 10 years missed out on massive gains. People that were bearish on gold and silver for the last 10 years missed out on massive gains. People that were bearish on the crypto market for the last 10 years missed out on massive gains. People that were bearish on the stock market since the last crash 10 years missed out on massive gains. So why be just bullish or bearish? Why not be both? Why not have short-term views, long-term views? Why not have stipulations? Why not have different views on different markets? Like, it's okay, in my opinion, to understand that the society we live in, the laws we live in, the corruption that's taking place at higher levels is fucked up. The manipulation in markets, the financial policy of the Fed is fucked up. For sure. But it doesn't just have to end because all of a sudden you recognize that's fucked up. It can be fucked up for another 10 years and then it ends. And that's my point is, look, you might be right. Gold might be about to surge to 10,000 in the next 10 years. The housing market might collapse in the next 10 years. You know, commodities might be on a bull market for 10 years. Stocks might go into a bear market for 10 years. But are you really going to miss out on 500% gains in the meantime because you're afraid of a 50% dump? It doesn't even make sense. And like, you know, there's really only two ways this ends, in my opinion. And I'm going to get out of here after this one because we really have been going on a long rant for a while. But I know you guys appreciate the my input and everything. But, you know, there's only historically two ways out of this situation. We either inflate the debt away, which means that we devalue the currency and then eventually pay off the debt with dollars that are worth less. Or we default, which means that we pay back a portion of our debt and then just say, sorry, and we just don't pay off the rest, and that's it. So if you're a creditor right now, a bondholder, like somebody that's owed money in this current financial system, and the dollar does crumble one way or the other, either through default or through devaluation, well, what happens? You end up getting back less than you were supposed to, either way. So neither one of them works out good. If we were going towards inflating away the debt, what would that mean? It means we're going to inflate the money so fast and keep the interest rates so low that we'll be able to pay off that debt in the future with money that's worth less. So the debt is technically the same amount of money, but value-wise, it's much less because the buying power of the dollar has gone down substantially. So by the time we pay you off with the debt, the dollar that we borrowed from you because of the time value of money is exponentially more value now. So if I give you back that same dollar 30 years later, but the dollar is worth 1/100th of what it was worth back then, all the interest in the world doesn't help you because you're getting back those dollars, but they're worth nothing now. So that's inflating away the debt. Well, theoretically, the deficit would go down faster than the dollar is going down, because the idea is that we're going to pay off the deficit with inflated dollars. So we need to make more dollars and not build the deficit faster than we're making dollars. Well, we're not doing that. We're running up exponentially larger deficits every year. So people are like, oh, they printed 25% more dollars this year. Well, yeah, but look at the national debt. I mean, last year we had like, I can't even think off the top of my head, but what was the net deficit in the United States? Like, we had like a deficit of $3 trillion from the normal economy. And then between the stimulus and everything, it was like another $3 trillion. So we met net negative like $6 trillion. And we took what was the debt? It was like, I can't even think off the top of my head. I think we had 15 trillion in debt and now we're at like 20 trillion in debt. So the debt went up faster than the dollar's value went down. So that's not working. We're not hyperinflating away the debt because we need to inflate the dollar faster. We need to print 100% more dollars this year and spend less than 100% the existing deficit in order for that to work. So we're not doing that. We're on track this year with the first $2 trillion from Biden, another $2 trillion from Biden, a $2 trillion stimulus plan, a $2 trillion social works plan, another $2 trillion probably welfare plan. I mean, so we're going to inflate the debt exponentially faster than we're inflating the dollar. So we can't, that doesn't work. We're not doing that. So what does that mean? It means historically speaking that that's not an option. So that what we're actually going to do is probably default. So we're going to default. So what does the default look like? Well, it looks like everybody says, hey, we need that money. And we say, hey, we don't have it. And they say, okay, well, we want gold or valuables because we don't want your dollars anymore. Nobody wants your dollars because you're inflating them and you owe everybody debt. Nobody wants your bonds because you don't have any goods. You don't have any services. So we want either land or goods or we'll take gold. Well, and then the U.S. says, no, we're not going to give you land. We're not going to give you commodities. We're not going to give you gold. So we can either go to war or we can just agree that we're not paying you. So that looks to me like what's going to happen. It looks like the United States is going to default on the dollar. That looks like the only possibility right now. Because if we were going to hyperinflate this dollar, if we were going to keep interest rates low and we were just going to print dollars, we would have to stop creating a deficit faster than we're printing dollars. So in order for that to work, we need to spend less or print way more. So that tells you hyperinflation. So maybe we go into a hyperinflationary period. But I think more likely what it looks like right now is happening is we're going to keep inflating our debt. We're going to keep devaluing the dollar consistently and exponentially, but not faster than we're spending money. Therefore, eventually we have to default. So you could argue that probably military spending is not a bad idea right now, because if we're going to waste money on social programs and welfare, we probably should waste money on infrastructure and military too, because infrastructure will help us once we default and military will help us once we default, or help us default because, we're be like strong militarily. So in my opinion, the way it looks like the government is going right now, we keep interest rates low, we keep devaluing the dollar, we keep printing money, we keep wasting money, but we keep the military strong. And I mean, I don't know if this infrastructure program is actually going to do anything functional, but theoretically, maybe we build some factories, some roads, like some useful stuff along the way. So, but we'll have to see, man. We'll really have to see. I mean, at this point in time, all we have to look at is opinions and history. And history says devalue or default. What are we going to do? Go back on the gold standard? I don't think it's going to happen. Not short term. Big Short, the guy was 2 years early and held a $70 million drawdown. Yeah. Oh, yeah. I mean, but he was, you could look at, he went silent again and was like, oh, I'm not doing any more predictions because, I called the short again and it's going to pop and the bubble's going to pop. This bubble goes 10 more years and he's broke. And, all he has is the time he was right compared to the other times he was wrong. Think China would try to collect? Yeah, I mean, I think everybody would try to collect, and that's where the military comes in, because essentially we're at the point now where it's like, all right, I mean, we'll just point our nukes at you, you point your nukes at us, but nobody really wants to nuke the world because nobody wins then. Matter of fact, it's in China's best interest because they have the best future or potential to be in charge. It's in their best interest not to shoot nukes, not to go to war. So it's actually in other countries' best interest to let us default and lose our power, I think, versus, if we're losing power, I think we're in the position where other countries have to call our bluff. We have to literally start real wars and kill people and fight or launch nukes to show people that we're serious, because we're losing everything. In my opinion, the United States is losing all its power, all its leverage. Yeah, I mean, people want the bubbles to pop because they say they're overvalued and everything. But the truth is, you don't want the bubbles to pop, because when the bubbles pop, it's going to be bad for everybody. It's going to be bad for the United States. It's going to be bad for the world. It's going to be bad for humanity. It's going to be bad for everybody but probably the ruling class. And even then, it's going to be bad for people because people are going to die from famine, poverty, war, everything. It's going to be absolutely horrible if all these bubbles pop, if there's riots in the streets. If you're a doomsdayer, you should be doomsdaying and then praying every night that you don't ever have to use your prep, use your doomsday scenario. That's the worst case scenario for everybody, no matter who you are. Unless you're the guy who's going to sit in a bunker by himself with cans of corn and all the stuff he's been saving up while the rest of humanity is wiped out, and you're telling your wife, I told you so. That's how useful is that? Who cares? I mean, don't pop me, bro. I totally agree, man. I mean, we're all better off recognizing what's going on, positioning ourselves accordingly, and then finding success rather than the bubble popping and getting to be see, I told you so. That's worst case scenario, in my opinion. That's the last thing I want to happen. I would rather these bubbles keep inflating exponentially for another 10 years and taking advantage of the momentum. We're just at that point right now where it's kind of all right, we should kind of be careful here, make sure we're diversified. Because in the end, what's the key? The key is not to be right. The key is to be right about diversification, to make sure that you're positioned so that when shit does go south, you're ready for it. Because nobody knows which thing's going to pop, which thing's going to go south, which thing's going to pump. I can't tell you for sure gold's going to go to 10,000, but I can tell you a scenario where gold goes to 10,000 and it'll make sense. Same as with silver going to 500 or 100. Same as Bitcoin going to 1 million, or same as, whatever it is, any asset, housing market continually going up for another 10 years. There's a situation for any of them, and there's an argument for any of them. But the truth is, the person who has no debt or very low percentage debt or diversified portfolio has hard assets, digital assets, whatever. There's a situation where every one of these positions is ideal. If the stock market goes parabolic, it's great to have stocks. If gold goes parabolic, it's great to have gold. But if all of a sudden you have to turn in all your gold because the government needs it because we're going back in the gold system, you either become a criminal or you turn in your gold. Well, that's bad, even though you were right. So you could be right about gold going to 10,000, but you have to turn it into the government and they pay you in something you don't want, or you're now a criminal. Same with crypto. Maybe Bitcoin goes to, $1 million a coin, but now it's illegal. So you're either a criminal because you hold Bitcoin, or, you know, whatever. Or, you know, maybe you have to leave your country. So now Bitcoin's good because you can use it to leave your country, and gold is bad because you can't go through an airport with gold. Even though gold's worth, you know, $10,000 an ounce, you can't move it. Even though Bitcoin's worth $1 million a coin, you can't move it. Even, you know, there's situations where you can be right and still wrong. Just like there's situations where you could be wrong and still right. So which one would you rather be? You want to be right about the apocalypse, but not able to benefit from it because, you know, the world melted down and now you have a bunch of gold but nothing to spend it on? Or do you want to be right about the dangers in the economy, but you want to be comfortably living and the system is still functioning? That's me. I want to be comfortable inside the system and it's still the function. I want to be right about the micro stuff inside of the system, but I do not want to be right about the macro, that we all are like serf slaves in the future to like the 0.1%, and none of us have any claim on anything, and the Bill Gates of the world and the Rockefellers of the world and everything are just openly controlling like slave population. Or maybe it's China, Communist Party, or maybe it's, you know, Russia, or maybe there's nuclear fallout and nobody's in charge. I don't want any of those situations to happen. Like, they all suck. But yeah, I think I'm going to call it there, guys. I mean, that was obviously plenty of my opinion. We hammered through all the charts here. You know, there's not a ton of opportunity one direction or another presenting itself at this exact moment, but there's a lot of opportunity showing up in the charts for longs, for shorts, for diversification, for taking profits, for investing, for everything. But to tell you the truth, everything right now is at like this massive inflection point, in my opinion. And I think earnings are going to be huge. I think the momentum of crypto is going to be huge. The main thing is I'm looking at right now, gold, silver chart. I'm looking at like earnings. I'm looking at, you know, Bitcoin dominance. I'm looking at total crypto market cap. I'm looking at everything right now because there's a ton of stuff giving us little clues. But the next moves that happen are going to be long and trending. The same way the last year was a nice trend to the upside. Some things were going parabolic while others were just going sideways. I think we're about to be in the same situation where some things start consolidating and other things start going parabolic. The key is just recognizing the trends as they develop and then getting on board with them. And I think that's right about to happen. Yeah, hell yeah. Good to see you, man. Good to see the squad, everybody in here today. Honestly, I think we hit the most concurrent viewers this stream also. So that definitely speaks highly of, you know, not like by an exponential amount or whatever, but, you know, if there's 15 people watching or whatever, and normally there's 10, that's 50% increase. So that's a pretty big deal. So definitely appreciate everybody showing up today. Appreciate all the support. You know, like always, like, share, subscribe, all that stuff. Definitely good to see everybody here. And I will see everyone. What is today? Wednesday night, right? So we'll see everybody on Sunday. Maybe pop in on like Friday for another live stream. Seems like those have been pretty popular. So I think we'll count on our Friday traditional market wrap up around like what, 3:30 to 4:30, 3:30 to 5, something like that, Eastern Standard Time. And then just as the traditional markets close and we get an idea of what crypto is going to do over the weekend, you know, what everything's looking at with a little bit of closure. And then, you know, we'll get our Sunday before everything opens and position ourselves for the upcoming week. So, but definitely a lot of opportunity out there. Definitely appreciate everybody showing up today, all the positive support and everything, and interaction through the comments. And if you're watching this later on, make sure you leave a like, subscribe, comment, all that good stuff. Let us know what you want to look at, and we'll take some requests next week too, or next stream, I should say. Yeah, new course I'm working on now. I've been a little slack this last like week or so just because I've been doing a lot of other stuff. But yeah, definitely planning on releasing a course in the near future. I want to have it out before the next subscriber goal is hit. So it's not going to be too long here. But I have pretty much everything laid out. I just need to actually start like filming it. So, but it'll have like full interactive effect as well. I'll be constantly like adding to it and everything. And I may even open back up the Discord. A lot of people have been asking about it lately, but it's just so much effort and I only have so much time. And I do like to, you know, enjoy my free time as well. So, you know, it's definitely like a balancing act for me. But we'll see. I mean, maybe the markets go sideways for a few more weeks, and you know, I can spend a little more time doing that other stuff. But I have a feeling we're right about to explode in some markets up, some markets down, etc. So I think the relaxation will be in the future, but right now is all about positioning. So, all right, everybody, good to see you all. Everybody have a good one. Yeah, I know a lot of people have been messaging me on TradingView, emails, like obviously you guys talking in here about the Discord and everything. And, you know, it was just a pain in the butt, honestly. Like, I didn't mind interacting with the people and everything, but it was a pain doing like the payments and all that stuff. And like, I don't have Patreon or whatever. Like, it was a pain. I don't know. We'll see. I'll probably I'll bring back something soon. I promise that, guys. But I'll decide at least soon, and then I'll bring it back in the very near future. Yeah, there was definitely a ton of. To tell you the truth, what happened with Discord, the main thing that happened with Discord was when I got COVID, I lost a lot of momentum because I didn't feel like I was living up to my end of the deal, having like a paid Discord group. I didn't feel like I was interacting as much as I was. I wasn't creating as much Discord exclusive content. I wasn't putting as much of my trade setups. But in a lot of ways too, you know, I kind of felt like people weren't interacting as much. They were literally just wanting like me to just post my trades so everybody could just copy along the trades. And I don't want to do that. I want people to learn. I want people to interact. I want people to benefit. I want to benefit from the community as much. So, you know, it's kind of a give and take. But in a lot of ways, too, to tell you the truth, the Discord would have only kept gaining momentum to the upside. And honestly, it would probably be massive at this point in time had I not gotten the dirty CV. So in the end, you know, excuses or not, you know, I don't want to blame the group by any means because in the end, you know, it was definitely the CV19 that, you know, made a big difference. So. Yeah, I had the Rona, man, and it was terrible. I mean, it lasted literally for months. Like I first got it, and the effects were like kind of mild, and then like a month later, it really like hit me. And I had some effects in the meantime, but man, I couldn't sleep. I had headaches all the time, and then like the wheezing was terrible, especially in the mornings or through the nights. Like it was absolutely crazy. And you know, I live somewhere like tropically like warm in like the eastern United States, like in the South. So it doesn't even get like cold here. And like a couple degrees difference in the temperature was like affecting my breathing. Like I'm fit, dude, like, you know, late 30s. Basically, I'm like 40 years old and I'm fit, like skinny, you know, no like long-term bad effects or whatever, like overall physically good shape. I eat healthy and everything. And it kicked my ass, man. I drink a ton of water. You know, I work out regularly. I, you know, overall eat healthy, you know, all that stuff. And it just absolutely destroyed me, man. I was like wheezing when I went to breathe. I had headaches all the time. I was always tired. I had no energy. Like it was terrible, man. So I can only I can only honestly like feel for people that don't have all those benefits. Like if you're old or if you're out of shape or you don't eat good or you already have breathing problems. Like I've seen it firsthand. It's no joke. So I would never downplay the Rona, and especially in like countries like, you know, what's going on in like India and stuff like that now, like, you know, third world countries or places where they don't have, you know, a healthcare system or a roof over their head or whatever. Like I understand this pandemic's not over for a lot of people. If it's not over for anybody, but it's definitely not over for like a lot of countries out there, let alone. And that's another, before I get out of here and get off on this tangent, that's one thing that really pissed me off is, you know, if this is some huge global pandemic and we're all going to like unite and the world's going to be one, like why is there still patents? Why is there still patents? It makes no damn sense. Not on everything. You don't have to depatent everything, but like on like, I don't know, man. They should have released all the patents for everything Rona related. So there's no excuse why, you know, if they're going to basically like fast track like FDA, like put regulations to the side and just create as much vaccine as possible, why is there still patents? That makes no sense to me. It makes absolutely no sense to me. Like once it's under control, you can patent the new future strain vaccines or the whatever preventative measures or whatever. But if this is like a once in a lifetime, once in 100 years, once in 1,000 years, whatever situation, and the whole world comes to a complete stop, and it's in the whole world's benefit to get this under control as fast as possible so the world economy can continue, world GDP can grow, so everybody can get back on their feet. Why not release everything? Why still have stupid patent laws and for-profit drug industries like basically having the entire world by the balls? Makes no sense to me. And with that, I think that's probably about as good a reason or note to wrap up on. Oh yeah, 100% was the Rona. But yeah, I mean, that's food for thought right there. Do you really have the world's best interest in mind? Or is this all just like a big money grab in the end? Because to me, it looks like concentration of wealth, power grab, money grab. Does not look to me like anybody gives a damn about the population. And, the people out there with no voice that are still suffering, that don't have, the United States, we got like over 50% of adults vaccinated, like 90% of people over a certain age. We're at the point now where people don't even want the vaccine anymore, or people are like not really like, nobody's worried about getting it that can't. So, like we're sitting pretty, but it's not like that everywhere. And that's fucked up, in my opinion. Like, I get it, nationalization, take care of our people first, like whatever. In my opinion, why didn't they just vaccinate like all old people everywhere as soon as possible? Why didn't they, if one vaccine has maybe like Johnson & Johnson has like a couple issues or whatever, maybe send that to all the poor countries who are already having ridiculously high death rates or whatever, that don't really give a shit about a blood clot 1 in 7 million, or whatever. I don't know. It's all bullshit politics in my opinion. But I'm going to wrap it there, guys. Good to see everybody. Always, pleasure to talk about the markets, and then also a couple other topics as well. So we'll wrap it there. Crypto Trend Trader with the Wednesday midweek market update, and I'm out of here.